Oh yes, legends. How's everybody doing? Hope you're doing fantastic. Let's analyze the situation here for the price of Bitcoin. Of course, we'll be taking a look at the stock market, the BTC CME futures gap that we are just a couple of $100 away of filling it, guys. Make sure to destroy the like button on your way in, because I think we got less than 50 likes, guys. What's going on? Let's go right ahead and say hello to that beautiful community here. And we'll be diving right away into the charts, legends. Okay, so yeah, let's first of all say hello to the beautiful community, of course, and see what's going on here, because, you know, we do have some important news coming, right? And we'll be here basically on the interest rate decision. I won't be covering this, guys. I ain't doing the video thing and putting it and listening. Okay, we ain't doing that. We'll probably crash another channel that is actually putting the video here of the Fed press conference, but I will very unlikely be covering this. But we'll be here for the volatility, the first few minutes, see what's going on. We're going to talk about higher time frame on Bitcoin. What are we looking at? Most importantly, what is going on the lower time frame, right? What levels are we at? Because yes, we are at that point of control, legends, okay, of this range, which is actually getting a reaction. However, we are literally a few $100 away of filling that CME futures gap. As you can see, we are just about to fill the gap. We are a few $100 to fill that gap. So is it possible to fill the gap and get a bounce? Okay, or we break through from the CME gap. Okay, we are at support at the moment. Of course, there's too many longs entering on Bybit bros here, always like to ruin the party. Okay, to get that bounce, there's a bunch of longs entering here, so they're probably going to get, you know, we're probably going to go lower, guys. I do think that even though we do get a bounce, you know, that bounce needs to be very, very strong. We'll explain a few scenarios here, but yeah, the Bybit, they just like to long at support. I mean, I don't blame them. Okay, I don't blame them, but we're still very downtrending. Got a bunch of longs entering down here, so it's, you want to see shorts. You want to see, you know, shorts entering the market here, right? So you can create that liquidity to the upside. The game is becoming difficult eventually, right? Too many eyeballs, right, looking at this major level of support. You know, it's that point. Yesterday was very, very difficult, guys. I can already tell you, whoever tried to short, you know, on Monday, that swing failure pattern from 116K, most of people must have been defensive, put stop loss here at break even. What the market does is stop everybody at break even. I am still leaning on a good chance of taking out this high, guys, but obviously we'll analyze that throughout the next coming hours, next hour or so. But overall, very difficult short, if you ask me. Okay, very, very difficult short here. Just a few $100 away from taking out 116.3, which is the high of Monday, and then rolling over here. Okay, so we are going to be discussing a little bit of Elliott wave theory. I mean, we are at support. Okay, we do have some interesting support in this area. We do have the anchored VWAP coming slightly lower than that point of control. That would be kind of in confluence of filling the CME gap, trying to break the point of control, trying to hit the anchored VWAP. We probably can get this on the news, guys. Remember, today is the kind of day that you could get that dump and pump, or pump and then dump aggressively. So it is going to be, you know, this is actually a very, very crucial area for the price of Bitcoin, where it could fake out, it could really just break down. It ends up being a third wave here to the downside, but this is really the zone that is like really, really crucial here for the price to actually maintain our support, right? We've got higher low support trend line. If you want to go with some basic technical analysis, right? We are trending here to the upside. We got the trend line, we got the point of control, we got the anchored VWAP from below. So, you know, there is good confluence. If you do take a look at Fibonacci, The golden pocket is slightly below as well. Golden pocket from the last higher low is sitting also with the anchored VWAP with the higher low support trend line. And, you know, we know about the golden pocket. It's the most respected Fibonacci zone that there is, right? When we do get the last lower high, the last low to the last high, guess where the price actually bounced in this region? Apart that we had a lot of confluence here, right? We did have the point of control of this entire range, right? It was a weekly naked point of control. That got a nice bounce. That actually bounced with the golden pocket from this pivot low to the pivot high. So, you know, market tells us that the golden pocket is heavily respected, especially if you can add some confluence. Well, hey, we can add pretty much some nice confluence in this zone. The overall question is, can we fake out the area, right? Can we just create that local volatility, just fill the gap, right, and then get the bounce? You know, place your bets, right, responsibly. I have to say, we're going to talk about a few scenarios and how we can detect a few things. I would say that filling the gap would be an aggressive long. Okay, it would be kind of a hit the gap, right? Fill the gap right there, have that 15-minute candle close above the zone, and we could see that bounce throughout the next 24 hours, right? You know, it is obviously an idea. I don't care about the gap being filled today or tomorrow, right? Just like on Sunday, you know, don't trust the Sunday pumps. We did pump a little bit more throughout Monday, creating that swing failure pattern from the 116K zone. And what I do like about the gap is, you know, after filling the gap, it does actually provide support. And it is kind of a coincidence. It's kind of a two of an easy trade, right? It's two of an easy, when there's too much confluence, it makes you doubt, right? We are just a few $100s in filling the gap. Right, you could front run the gap as well. Don't get me wrong here, right? The gap doesn't need to be filled. I know it provides support most of the times once it's filled, right? You got a little gap right over here also, right? You filled the gap, and what did you do after filling that gap of the 20th of October, right? It wasn't the last weekend. Well, it was the previous weekend. Yeah, it was actually almost. Yeah, 2 weeks ago, almost. What day is it today? 29th. Well, 9 days ago, we had that gap, man. We had that gap right over here. Filled the gap, hit the golden pocket, got a, you know, big support here. You had a weekly naked point of control, a couple of wicks, and then move up. Filling the gap provides support. You fill it, and you usually get a pretty nice bounce. Usually, that doesn't mean always. We are just a few $100s in filling the gap. Can we fill the gap with the CPI data or the Fed press conference, right? We can front run it. Basically, it would be nice to actually come down to fill the gap, okay? When you're so close to it, you just might as well want to fill it. And you can always consider a double bottom, right? Get that over leveraged long positions, stop them out, because this is what happens, guys. When we take a look at on how the market, you know, how it reacts, right? Swing failure pattern from 116K, people that were defensive and put stop loss to break even, they have missed the boat, right? Same scenario when we filled the gap here from the last week, 9 days ago, we came back down, right? So the double bottoms at good levels to take a trade are very, very common. And this is obviously a lesson, right? It's a lesson to really understand when there's a lot of support and you start, you know, kind of getting a reaction, you can get that bounce where, you know, people can over leverage long positions thinking this is it, we filled the gap, now we go to higher levels, and then just come down and create that double bottom, which is kind of a, you know, a double bottom is a strategy, double top, double bottom, right? So it makes you think about that situation, right? Just getting ready on the possible outcome. How, you know, think ahead of the market. Think ahead of the market, unless you just break down literally, right? Because maybe the gap is not finding support and you actually lose the level and go to lower levels. There's not that much support We've got value area low of the entire zone since the 11th of October, right? This big range that we formed in the last few weeks, which is sitting at 109K. Now, I mean, we only have a value area low here. You got the 7/8 Fibonacci from this pivot. But what is interesting is that you have the golden pocket from this pivot low, right? That is coming slightly beneath that value area low. So this is an area that if you don't hold the VWAP after filling the gap, right? Because it would be nice to fill that gap, maybe a double bottom in this region and then get the bounce. If you lose this level, man, I'm not really too interested here in catching a falling knife, if I'm honest with you. There's not really much in between 110 and 109. This would be a bit aggressive trying to long the 109K zone where you have the golden pocket from the low to the high. Is kind of the last level. It would be a fake out of the trend, right? The uptrend momentum here. You would still technically form a higher low, but it starts to be a little bit dangerous, right? But dangerous is something where you sometimes have the best opportunities, right? Because then it ends up in a fake out. You're breaking down, the gap doesn't get supported, the anchored VWAP doesn't get supported, you're breaking out from the point of control. Holy smokes, it's going down. That's it, right? Game over. We're going to test this low and test this low. And then, we need to consider the possibility of faking out, right? Faking out from that, from the trend, which happens a lot as well, right? So the best area is that value area low of this entire zone, right? Look no further. Golden pocket. That's actually where you have the highest volume node, right? When we get the volume profile, the golden pocket from this low right over here to the high is sitting where we have a high volume node, right? We do have that high volume node here, which is literally the value area low, right? It's the second highest volume node of October, you would arguably discuss, right? It's down here. Of course, you would kind of expect resistance, right? But this is a bouncing zone. There's no doubt about it, right? Look out. We need to think outside of the box when, if this doesn't hold, we might front run as well. This is obviously not a scenario. We would have to form a very strong impulse and a corrective structure here to really say, okay, this is looking pretty good, right? To get that momentum up. Long in here is, it is challenging unless you get into a local double bottom on the lower time frames, right? Which is very much acceptable if you are in front of the charts and you just sniper short the exact lows. But ultimately, I want to check the gap, right? You see if the gap does manage to get filled, and if it gets filled, you start trading above the gap. It could definitely get that bounce. Always aware of a double bottom here. It's always an option, and you just really need to be in front of the charts to sniper that double bottom, because once the double bottom happens, then the price leaves, right? The price leaves, just like this double bottom that we had back on the 22nd of October, where, you filled that little gap that we had here. You came down to hit the point of control, but as we got that bounce, the price came down to form that double bottom, and then it just leaves without you, right? That's definitely a scenario that could happen after filling the gap, coming down to this anchored VWAP from the pivot low of the range. After filling that gap, right, you get that bounce, it looks bullish. Ultimately, you create that another low right there, and then you get the rally, okay? It's just trying to detect that local double bottom, which they are very common at these confluence levels. And coincidence, we had a gap here as well from last week, right? So we're just talking about confluence area. We'll dive into the Elliott wave theory scenarios, but I know a lot of people just Elliott wave theory is a bitter pill to swallow for many, okay? It is a bitter pill for many, so I'm just keeping it a little bit more basic and more value areas, point of control, VWAP, CME gap fill. It does provide support. We're getting a little bit of a bounce right now, very, very tiny bounce. So we just generally trend lines, keep it very easy for the viewer, because I realize that a lot of people, when it starts becoming a little bit complex and too many different scenarios with Elliott Wave, it's a bitter pill, right? And people are like, I've had it with this nonsense, right? there's too many scenarios, too many stuff. And right now we're just fitting in the Confluence. Elliott Wave theory, of course, for me, Elliott Wave theory is without a doubt, one of the most powerful ways of analyzing the structure, and obviously giving you that possible direction or continuation of a trending market eventually. So yeah, anyway, let's go through the comment section, say hello to the beautiful community, and we can discuss the bearish case. We can discuss the bullish one. Price is getting a little bit of a bounce here at the moment of a few $100s, nothing too serious. We do have 20 minutes to get the interest rate decision, which I think we know it's going to be, it's here, it's 99.9% probability that it's going to be 25 basis point, right, of cut. So it's kind of priced in, right? You would say we know what's going to happen. What is going to be interesting maybe is Fed press conference, right? This man, Jerome Powell, can just say something that people don't like or people like very much, and it can definitely affect, right, that momentum. So it really depends on what he says. It might be a big fat nothing burger, guys. We've seen it also before where nothing much really happens. You just get a bit of local volatility, and that's basically it. So anyway, get your votes in here on the poll. Hang on a minute. My laptop wasn't charging. It was not charging, legends. So it's charging now. So yeah, we're getting a little bit of a bouncy action here. Okay, we need to talk about the Elliott Wave scenarios, because yes, this could be a three-wave structure. Yesterday we mentioned how it is likely to take out this high if you do get very close to it. We do have, this fits better as a three-wave structure, in my opinion. Of course, could you fit a five-waver here? You have to, right? If you can fit it of some kind, you just have to, right? So, the clearest thing here is, that's the only lower high that I see available for a wave 4 and then a wave 5 here to form a contracting diagonal, basically. There's just no other way. For me, it looked more as a three-waver. You claim this lower high. You're literally getting above the 7/8 Fibonacci. I have to say, getting almost to the 0.9 fib is a rare target for a wave 2. Okay, and it's more common for a wave B or a wave X. So getting all the way up here to almost claim this high is disturbing. It is telling me that there is a good chance that we come and hit this high at some point, purely based on this price action. So I like the idea. We need to talk about the bullish case and the bearish case. We are currently at support. We are getting a little bit of a reaction here to the upside. Anybody that is looking for a scalp day trade, I would be aware. I think that we are going to claim the lows again. We just have very important news in the next 20 minutes and even 50 minutes. We do have the Fed press conference. So if you have any local trades here, it's, just realize that it could be a volatility fest. We cannot, predict if it's going to break down, or if it's going to test, get a bounce, V shape, or pump and then absolutely nuke. It's one of those difficult moments, right, where you just don't know the proper outcome. Of course, on the charts, we do have the support. We do have the CME gap. If it's filled completely, it could get that reaction bounce as well. So I would be paying attention to a possible, like a local double bottom here. A local double bottom, which can be a little bit aggressive. So if you do move up here, you might get a few $100s of a move down, fill the gap, hit that anchored VWAP, and then obviously, get that reaction. Now, we need to consider anchored VWAP got very well respected from the all-time high on this movement here. We mentioned this a few days before, realizing that this is a good kind of an SFP zone because you also have that anchored VWAP from all-time high, right? Which we did get an exact rejection from that anchored VWAP right over here from all-time high. So you need higher time frame pivots, right, to get the anchored VWAP in right there. Anchored VWAP from all-time high got heavily respected when it was touched here after this major move, getting a beautiful rejection of, you know, how much was it? It was about $7,000 of a rejection. So anchored VWAP on the other side, instead of all-time high from the pivot low of the range when before we started the uptrend, is literally, you know, not even $1,000 away from the recent lows. And that's in Confluence by filling the gap. So kind of a double bottom here makes sense. It does make sense. Of course, price sometimes front runs all of this beautiful zone, right? The market likes to do what you don't want it to do, right? So yeah, I mean, a front run is possible, but I wouldn't be too interested. You know, I would be patiently waiting for that zone to see if we do get some kind of a reaction. You need to be careful because you could always break down the levels, right? Just break down finally that uptrend, and it's just breaking down, right? Levels of support and resistance are good till they are broken, right? If they are broken, then eventually you can expect that major downfall, and that's where you do not need to be trapped, right? You don't want to be trapped. This is where you need to lower risk, lower capital on your trading setups, you know, give a bit of room, give a bit of a breather, because people that get emotional by getting into these trades, and if they go too heavy and the market goes against them, then they're going to be heavily underwater. They're not going to know how to manage the situation. And sometimes it's just as easy as risking 0.5% of capital, right? And get a bit of a wider stop. And if you do get a sign of strength in the next coming days, and it actually after the volatility gains some momentum and some corrective structure, you know, you can always add to that position, right? There's always a very comfortable way of trading when you lower risk, right? You're lowering risk. And, you know, if I risk 2 peanuts, you know, if the price comes down here, if I've longed here and I'm down 2 peanuts, well, you know, who cares? That's 2 peanuts, right? So sometimes you want to add on the sign of strength, right? But sometimes it is very difficult to get in on the trade setup, right? Because right now you're like, oh, you know, it's moving down. I don't want to long. It's going to lose it. And then suddenly the price, boom, it gets a massive bounce. Very, very strongly. You're waiting for the pullback, but the pullbacks, you know, are very, very shallow. We talked about this pullback actually. Whoever got into this one to get this rally, very, very good. This was actually a pretty nice area to get into a long after the reaction here. But sometimes it's not easy, right? Sometimes you're waiting for those pullbacks, and the price kind of gets very, very shallow pullbacks and just continues rallying. And sometimes if you are going to try and catch the level of Confluence, which sometimes it's the best option, right? Because sometimes signs of strength is just, you know, where do I long? Where, you know, you can detect them, of course, if you're very, very active on the charts. But, you know, like, as mentioned, this is a solid zone of support. You know, you don't need to go all in. You can always get into a small position if you want to detect that double bottom scenario, or kind of SFP the anchored VWAP here from the low. Anchored VWAP is, you know, the strategy to get into the trade of the anchored VWAP. I mean, look no further. We have an example from the all-time high here, right? If you want to short the anchored VWAP, right, from a major pivot high or a major pivot low, you're literally looking for the rejection of the anchored VWAP. Once you reject, you enter, your stop loss is above the high, and then you ride the momentum. You are defensive, of course. So yeah, I mean, like I said, we could fill the gap aggressively, which we are just a few $100s away, where we are getting a bounce now. So it's, you know, around about 1,000. But after filling that gap and coming down to the anchored VWAP, the only way to trade it is fake out from beneath the anchored VWAP. So get below it and get a reaction here, because you can bounce very aggressively out of nowhere. And today is one of those days, right, where you get that volatility. It might look like it's breaking down, but it ends up getting a reaction at these confluence levels. And today is one of those days that we can V-shape, or we can pump and absolutely nuke later on, right? It's a very, very trappy day, right? Where these news is, you come out, oh, it's pumping, and then boom, it rolls over. Oh my goodness, it's dumping, and then you get a V-shaped recovery after, right? Where, you know, it's one of those days where the price it does have that potential of reversing of what it does first, right? So yeah, so something to take into consideration when we're talking about strategies here. I mean, you got this one that got the rejection. The best thing is to enter on the rejection and stop loss is at the high. There's no more to it, right? Look no further. Same scenario would be for this one. You come into the VWAP and you create that fake out. You enter, stop loss at the low, and you know, you're looking for that recovery later on. There's a lot of confluence here. There is a lot of confluence at this anchored VWAP from the pivot low, because you do have golden pocket, which is also slightly below, right? I mean, it's just in the anchored VWAP, golden pocket from this last higher low. So we've got this movement, higher low, this movement, higher low. When there's so much confluence, we're already bouncing at the point of control, actually. Whoever aggressively got into the point of control, I would, you know, especially after the news, I would take this as a scalp, but we are exactly bouncing at the point of control. You know, this is a very, very aggressive entry coming down. Maybe you check the 1 minute time frame and you actually saw, you know, a possibility of an entry, right? Depending on your strategy, but we literally just bounced at the point of control, just under $1,000, just about to make $1,000 bounce, which is, you know, always good. It is an aggressive entry, I have to say. Maybe on the 1 minute time frame, you did see some signs of support, right? Let's see if this does load, and let's go through the comment section right away. We've got 500 people watching the stream. Andy, you should post 3 videos per day plus a live stream. Yes, sir. Yes, a lot of content, a lot of technical analysis, a lot of education, looking for strategies, looking for scenarios. Anyway, on the 1 minute time frame, we were kind of, you know, finding a little bit of a stop, right? We also kind of stopped here, but we, you know, inevitably went down. You know, not one of the easiest trades eventually, right? We always like double bottoms. Double bottoms are kind of the easiest ones to get in. After forming a little range, right? Test the lows, boop, and create that little swing failure pattern, and then come back to the highs of the range, right? It's just a very, very, very simple strategy, right? Not an easy long here, as we did slightly create a higher low. It is true that when you come so close to a higher to a low right there, it's not common to create a wave 2 here. So if you're expecting, you know, market to really, really rally from this point, it is not too common to retrace that much. It makes it a poor higher low right there. So a little bit skeptical about this being the low right now, and we have an ultimate recovery, which at the end of the day we can do that. So who's up for a little bit of Elliott wave theory, guys? Let me know in the comment section. Who's up for a little bit of Elliott wave theory? Let me know right away in the comment section, okay? Who's longing, who's shorting? Get your votes here on the poll, because we got over 400 votes. Man, we got more votes on the poll than likes. You do have power to click on the poll, but not the like button, eh? Okay. You lazy buggers. Will Bitcoin hit new all-time highs in 2025? 73% of people are saying yes, guys. Man, I am kind of feeling a little bit bearish. So, I mean, that probably means that we are going to pump, right? You know when you feel bearish and then the price rockets? Same as when you feel bullish, super bullish, and then the market dumps. I kind of feel bearish. And when you feel something about the market emotionally, you kind of usually reverse, right? So it is a very, very good reversal point here when we consider support. We're going to do a little bit of Elliott wave theory, guys, if the people want to. If the people don't want to, we will not do it. We will not do some Elliott wave analysis. All right, because I know it is a bitter pill to swallow for many, right? Especially if you don't understand the fib levels, right, and the different wave scenarios. I know a lot of you do know your shit on Elliott wave theory, but sometimes we just need to go through the basics, right? Swing failure pattern, point of control, swing failure pattern from the high, bang, point of control, bounce. You know, who needs Elliott wave theory when you just got basic levels of confluence that get reactions, right? Sometimes you want to keep it simple. Even a support resistance flip. I mean, come on, right? Who needs anything when you have a low right over here, which is acting as resistance? Man, it's just a goddamn basic support resistance flip, right? Sometimes simple stuff is what works, guys. Sometimes simple stuff is what works. I'll tell you what, we do have an inverted possible head and shoulder. That looks good, right? Inverted head and shoulder. I mean, this is a little bit of a humpback Notre Dame, because we should be going a little bit lower here, but it's a little bit like that. This inverted head and shoulder, if the right shoulder is going to be here, it's a little bit, you know, it doesn't really matter. You can form a larger right shoulder or a smaller one. It doesn't really matter. But the neckline is pretty damn obvious. If we do move up in the next leg, I mean, on the video today, I didn't talk about the resistance, guys, much. I kind of went through the video without talking about, you know, well, we did talk about the resistance, but I do think that if the price, based on Elliott wave theory, based on what we have here on the structure, that if we come back in the next coming days to 116k, I think it's just going to break it nicely. We are going to, you know, I do see it pumping just because of this fair value gap, right? Yes, we have the point of control and we have the golden pocket from all-time high to the low, but I have to be honest here. Based on the inverted head and shoulder, only joking, guys, not because of this, it's based on a possible double 1-2 here. You know, you're looking for a third wave, right, to break out here. I mean, this would be ultimately super bullish. You would be looking for a retracement later on, and then off we go to all-time high and possibly break it, right? There's a little bit of wishful thinking. But if we were to move up with high volume here and choppiness, you know, you're literally looking for a possible impulse here. So I don't think we are going to reject if we get back to 116k, right? Because I think it's pretty obvious. It's pretty obvious. Or an ascending triangle, right? If you want. Not really an ascending triangle because this movement here did not hit this high, but you kind of, you know, you've tapped it again, you got a rejection. If it were to come up there, I do see it breaking. This would not be a swing failure pattern that I would be too interested in. I mean, if you do get the swing failure pattern, it's always an attempt. It is always an attempt because you might get surprised and it actually, you know, created that triple top from 116k. So it just gives you a good entry and a good stop loss. If you reject, just be defensive, right? If it rolls over, then, you know, it's a good trade setup. But yeah, if I have that, you know, based on the analysis, I do believe that if you get back up to 116k, it's likely going to pop out a few $1,000s. It likely will pop out if it does manage to get up there. Now, who wants a bit of Elliott wave theory, guys? Right? Who wants a little bit of Elliott wave theory? We do have the interest rate decision. We're going to get some volatility now in the next coming minutes. So yeah, make sure to stay tuned. Make sure to stay tuned. Shall we put the stock market to see what stock market is doing? I mean, the stock market has been pumping and Bitcoin has been dumping, which is, you know, hasn't been much correlation on the lower time frame. Anyway, a lot of people here expecting new all-time highs for 2025. I also expect, well, I am actually bullish just because you know why. You know why I am actually more bullish, okay, on Bitcoin. And you know, I do believe that what we formed here is a flat structure. Okay, what is disturbing for me to believe that this is the top of the bull run is that we moved up in a pretty damn clear three-wave move, right? And I mean, this just gives you good information. It's good information to consider, right? A lot of people don't think that the bear market is coming, right? Just as we see on the poll, a lot of people are expecting new all-time high, and well, this is scary. This is scary because we know that the majority is wrong, right? Most of the times, and there's including myself. Well, I'm looking at Elliott wave theory, and I'm looking at the structure, and I'm like, you know, I think that this impulse to the downside is part of an ABC flat, right? When you have from a major low a three-wave move to the upside, you can only end in a three-wave structure if you have some kind of a diagonal, which we don't have when we zoom out on the higher time frame. Hang on a minute, let me just get, we don't need the S&P 500. We got 2 minutes here for the interest rate decision, which is going to be it's going to be 25 basis point, but I think we are going to get a little bit of local volatility anyway. What do you guys think? Let me know in the comment section. Let's go right away through. Let's say hello. We like Elliott wave, says 𝗖𝗿𝗆𝗃. Okay, on BitMEX, the gap is already filled. Man, BitMEX, are people actually still using BitMEX? Does it? I thought it wasn't even existing. Damn, BitMEX. I remember that was my first crypto exchange that I started trading, BitMEX. Man, that was such a bad exchange. It was the worst. The worst. Anyway, let's go. Crypto by 𝗞𝗔, guys. Make sure to go and check him out. Much love to CBM here. Okay, much love. Go and check out his channel. Insane content every single day. Okay, make sure to go and check him out. Subscribe to the channel. Leading diagonal, maybe. Is that to the upside? Leading diagonal to the, you mean to the downside? What time frame? Let me know the time frame, because you need to let me know when you say something about Elliott wave theory, leading diagonal. I assume that it's this local one maybe to the downside. Yeah, there is a chance here for a leading diagonal. So the thing is here, as we do have a 5-wave. Okay, we got the interest rate cuts, which is likely going to be 25 basis points, right? Yeah, we are at 4%, so that is exactly what is happening. We're getting a little bit of local volatility here, nothing too major. Let's go down to the 5-minute time frame, and then we'll do a little bit of Elliott wave theory, guys. Okay. Little bit of a dump and pump. I think we need to get the ES stock market, CME, see what's going on. See what's going on here. A little bit of a dump and pump, a little bit of local volatility, nothing too major. S&P literally not doing anything. The S&P is not doing nada. Hang on a minute. Why isn't my data coming in here? Oh my goodness, it's happening again. 1 second, guys. Oh my, I can't believe it. Oh my, they did it again. They did it again. Yeah, on this one it is coming in through. Live data here on the stock market. Not much volatility. I think the volatility might be kicking in after the Fed press conference. Maybe not, guys. You know, people make a big thing about this. Sometimes that it just doesn't do anything. It doesn't do much. Let's go through the comment section. Good evening, chartist. Rudy, much love to you, my man. Much love to you. Make sure to get your votes in here if you're speculating on Bitcoin new all-time high. 28% are saying no. We've got 28% out of 500 votes plus that the top is in, guys, for 2025 already. 28%. People are actually calling for the top. Good evening, Joan. How are you doing, my brother? Much love. Buckle up. It's going to get bumpy, legends. Yes, it is. CME gap still open, $300. Yes, it is. CME gap still open here. Bitcoin getting a little bit of pumpy action. How epic would it be to front run everything? Well, not front run everything, because we are hitting the point of control of this range. Point of control has been hit, and it is getting a bounce of around about $1,000. Round about $1,000. I don't think so, guys. You know, having that gap here almost filled. Yeah, we're likely going to fill it. Okay. Who wants a little bit of Elliott wave theory? S&P now getting the test of the lows of today, of this range. Testing the lows, forming a quick SFP. Quick SFP of the lows on the stock market. ES always gives you you know, I mean, how cool are these SFPs, right? They're just sniper trades. Test the highs, boom, down. Test the lows, boom, little bounce. So good. You can trade stock market, guys. The S&P 500 can be traded on BTCC, guys. Okay, BTCC does have the stock market. You know the deal. Down below, you get an insane bonus, guys, up to $10,000 in rewards with that link down below. Okay, so who wants a little bit of Elliott wave theory, guys? Let me know in the comment section. Let's see if we do get lots of yeses or lots of nos. If not, we're going to just keep it as, you know, naked point of controls, daily levels. Where do we have the resistance, support? I think we need to do a combination with Elliott wave theory, of course. It helps us a lot. Elliot just works, says Shaba. Absolutely, it does. Fed cut 25 basis points. Yes, very much expected. Let's go. Elliott wave, says Sin Games. Yes. Lots of totally trend in 4 hourly, making a leading diagonal. Yes, very true. Totally trend. Totally trend on BTC or the total market cap. Man, I don't know. Is that on the higher time frame? 4 hourly time frame, making a leading diagonal. I mean, yeah. Let's just go through. Let's see. I'm gonna set some alerts here, guys, because we're coming down now on Bitcoin. I kind of want that gap to be filled. We want that gap to be filled here on Bitcoin. It's gonna be a little bit of a sniper down to the anchored VWAP. We'll get to Elliott wave theory right now, guys, but just to realize the fake out zone of the point of control, you got the trend line, higher low support trend line. I mean, I'm not a fan of trend line, but if we do have confluence with the trend line support and we have anchored VWAP, we do have the CME gap fill also, a few $100s beneath the point of control. It kind of all comes together, right? Golden pocket from the last pivot high, higher low, sorry, to the next high. There's a lot going on here. There's a lot going on. So, yeah, we need to do Elliott wave theory anyway. Zooming out, we need to zoom out. Let me just set an alert here beneath the recent lows, because a local double bottom here could be very interesting. We set some alerts right there beneath the recent low to see if we do fill the gap and could form a little bit of a, you know, kind of a double bottom or an SFP, right? A reaction at the VWAP that could get a sniper trade. Anybody that is looking to catch the bottom at the confluent zones and have smelly fingers, well, you know the deal, right? If you're a bottom catcher, you can have smelly fingers very, very quickly, guys. Let's go through the higher time frame. S&P, just a bit of local volatility. I think we've got the Fed press conference later on. We might get a bit of momentum. I think the last one we didn't get any kind of volatility. But let's cover, somebody is here in the comment section, leading diagonal on the 4 hourly time frame. Is that to the upside? Leading diagonal, okay, to the upside, I would assume that you're saying here. Basically, this latest move on the 4 hourly, there is a problem, okay? When we consider Elliott wave theory, guys, I'm going to keep it very simple here for the viewer. You have the low created from the correction of Q1 of 2025. You have the correction here in April. That is the low, right? That is the low. The next high is this one, right? We cannot argue about that. It's just, we know it's that one, right? Then this 3-wave structure to the downside, and then the next high clearly is this one, right? Then the next correction is this one, and then the next high is this one. Then you correct down here to, you know, you're basically taking out this higher low. So that to be a leading diagonal or ending diagonal, it doesn't matter. If it is an ending diagonal, what we are expecting is another 4 and a 5 throughout the next coming weeks. Okay, if it's a leading diagonal, it should be a wave 1, 2, and 3, and we just formed multiple 1, 2s. Your larger wave 5 is not finished. I mean, you can, ending diagonals are more common than leading diagonals. Okay, that's something to take into consideration. So if ending diagonals are more common than a leading diagonal, then you'd have to go with a wave 5 here, another wave 4, and then another wave 5, right? And we just formed several 4 5s to end the bull market. But you know, based on a diagonal, the only solid diagonal that I can get here is this one, which is a contracting diagonal from the last 3 higher highs and the last 2 higher lows. Okay, contracting diagonal, leading or ending, doesn't matter. Ending diagonal is more common, just to take into consideration. The thing is, after this being a 5-wave move, what has formed here, right? What is all of this? Well, we understood that it was likely a 3-wave corrective structure. This is why the probabilities were to hit all-time high, which we did in a 3-wave move up. I mean, if you want to try and fit a 5-waver here, I'm not sure how you're going to do it, but it's just, if it looks bad, it's probably not that. If it looks good, it's probably what it looks good, right? Which is a 3-wave structure to the upside here. So then we got this 5-wave move down, right? Look no further. This is an impulse. And then, you know, that's what's making it tricky here when we consider Elliott wave theory. If you're looking for an impulse down, you can form a correction up and then move down later on, right? Forming a wave 1, wave 2, wave 3. However, the main reason why we are still sticking bullish on the higher time frame, regardless if you come down below 100k, doesn't matter. You can still come down there and it's still bullish on the higher time frame because you're forming higher lows on the higher time frame, and you could form a flat and wave W, a wave X, whatever corrective structure you want to form here, and then maybe another zigzag to finish your wave Y. So, I mean, it would still be potentially bullish, which will be interesting to see how the market develops in the next coming weeks. But we would still potentially, you know, look for this to be a WXY. Now, somebody was saying about a diagonal here on the higher time frame, right? This is the simple reason that we're still considering on the higher time frame that we do take out all-time high, because, you know, based on the information that we have a very good chance that this is a flat, because you have a 3-wave move to the upside here from this correction. And maybe, I'm not sure if you're talking about a diagonal considering this high. The problem is, if you consider this high right over here, bear with me here, guys, because this is where the bomb diggity happens, right? And you understand how you cannot form a 5-wave structure from this low to this high. And the reason being here is because you have this as your wave one, or, you know, I'm not sure, but would you consider this your wave one? Then you need to consider this. Okay, you can choose as you wish, right? Let's just say that this is your wave one for some reason, right? 3 wave up. This would be 2. Yeah, you can't really. Wave 2, 3, 4. No, you can't, right? This your wave 1. No, you can't, right? You only got this. So this has to be your wave 1. This has to be your wave 2. Considering this your wave 3, right? Which is this movement here. This your wave 4, and this your wave 5. That was it, right? We finished the bull run in a 5-wave structure. When you connect wave 1 and wave 3, wave 2 and wave 4, it has to be, sorry, this wave 3 actually over here, it has to be an expanding diagonal. And in an expanding diagonal, your wave 5 needs to be longer than your wave 3. You can't have your wave 5 smaller than your wave 3 in a expanding diagonal, and it can't be a normal impulse because your wave 4 is overlapping your wave 1. So there's no way of counting a 5-wave structure with this being a 5 from this low of April. So I mean, that opens the door, as explained in the, you know, we've been talking about this on the higher time frame for I don't know how long, guys. Too long. But just for any new subscribers, right, that we are considering here the most likely scenario that this is a flat. Now the problem is, based on timing, the price can still take out this low and even this low at $98,000, and we still have a bullish chance. And the main reason why is because a flat can be one wave in a W. Right now, we're just busy with wave X potentially. And then obviously the worst outcome here in the bearish case scenario is forming another zigzag in your wave Y at some point, which, you know, would still be bullish because it's all a corrective structure. And yeah, I mean, this is when we consider seasonality, there won't be time for the 4-year cycle theory to develop this WXY, because come on, we're entering into November right now. Can we finish that sideways correction in 2 months? Your wave X and your wave Y, maybe it could take a few weeks based on timing. I mean, there is a bit of time still, but based on this information, for the moment, there is that good chance that this is a flat. And if you have a flat, of course, it's all part of a correction. You need to understand that it does still have the potential of sweeping this low and even this low, which I think it would be pretty interesting, because that would obviously be the moment where people just like saying, that's it, guys, it's bearish. If you were to come down below 103, you know, losing 100K, I think this would still be a very, very interesting area, obviously, to consider longs. But, you know, it's going to be a bit of a bearish move. So 1 hourly time frame. 1 hourly time frame, most importantly, Elliott wave theory scenarios that could get developed. Let's get this alert out of the way. Smash up the like button, guys, if you do enjoy the education, the reasons of probabilities and Elliott wave theory, right? We just like to go through them. I know it can be a little bit punchy and a little bit of a bitter pill to swallow for many guys, because it's a lot of information that you get in the brain, and people might, you know, say, screw this crap, you know, I'm out of here. I'll rather look for some random moving averages on the charts, right? From somebody else, and just keep it more relaxed. But if you want to go into the rabbit hole, then obviously Elliott wave theory is the way to go. Staffer one, my man, much love to you, brother. Thank you very much for joining. I'm here following you, Andy, from very beginning, when your catchphrase was something like, keep it simple so a 5-year-old and can understand. Very true, very true. This is why we started. I'm going to try, you know, keep it more simple here. Main strategies from the channel have been double bottoms, double tops, right? Swing failure pattern. Lot of ranging strategies. We'll try and keep it simple as well. I like to go through Elliott wave theory just because it gives you, the possible direction, right? The possible levels where it needs to bounce. You can find out where there's a sign of strength or a sign of weakness. But sometimes keeping it simple for your entries and your strategies is much better, right? When you do Elliott wave theory, it can overcomplicate the situation. And sometimes it's just as easy as getting a support resistance flip to get into a trade, right? Why Coinbase chart and not Bybit USD dollar tether? I'll tell you why. The problem is that on futures such as Bybit, we've created a wick here. Okay, we created a disturbing wick, and when we are considering Elliott wave theory, we need to go to a spot exchange, right, where we haven't got that major liquidation event, because it's literally a liquidation event which kind of messes up the chart when we consider Elliott wave theory. But this is why, preferably you get a chart that doesn't create these liquidity events to consider Elliott wave theory, to be honest. So we're kind of doing a bit of both. I like Bybit. I like futures exchanges. I got Bybit right there because of the levels, right? Because there's more volume. I prefer using, a futures exchange, a big one such as Bybit, because the levels are better when we consider point of controls, naked point of controls. So, that's the main reason why Coinbase, with this wick, we put the Coinbase chart when we consider Elliott wave theory. That's the main reason. Much love. Paz María Vallejos. ¿Cómo estás? Coinbase don't have the crazy wicks for futures, but spot. Suzanne there. Suzanne is an absolute machine. She knows the business. She knows why. Somebody stop me. What's going on? What's going on, man? Much love. I've replaced "It's not rocket science" with "It's not Elliott wave theory." QT ending December 1st. QT ending December the 1st. There's going to be a lot of channels now that are going to be covering the Fed interest rate decision legends. Okay, so I'm probably going to crash into Tom Crown. He's like one of the biggest out there doing the Fed press conference, and I like to crash and just put some silly comments on his live. But if you want something interesting about the quantitative tightening, go and check out Benjamin Cowen's latest video, which he literally explains, which I've been very much vocal about this, guys. It's this chart right over here. When you peak out after quantitative tightening, markets usually top out soon. It doesn't need to be straight away, but history has told us that every time after increasing rates and start cutting them, we have seen a major stock market crash, right? Well, crypto was not here yet in 1990, but stock market crash was there. And a small recession, right? Recessions are usually 6 months, 12 months, give or take. If it's going to be a depression, it could be a few years. But most of, people that are alive right now haven't seen a recession, haven't seen a depression, right? Like 1929. Recessions have usually been, 6 to 18 months. They're not, back in 2008, everything was pretty okay in 2010, as things were recovering. Interest rates stayed very, very low. But just so you understand, every single time, guys, this is like, you cannot make this up. When you take a look at the recessions that we've had in the world, they've always followed after getting, interest rate cuts. After a big rally in interest rates, when you start cutting them, people are excited because they think that we're going to get, a lot of money printing, right? That should pump our altcoin bags. Right, that should pump my Shiba Inu coins that I have in my wallet, right? Because, that's it. Interest rates, we are cutting rates. That should be good, right? it is good later on after a major crash. That's when it's good, right? It's good after the crash, but be aware that a big, big crash could happen, because it has always happened when we take this into consideration. And Benjamin Cowan, shout out to him, one of the biggest channels going through analytics and data, which is very, very good. It's one of the only channels that I like to look at when, we're talking about analytics and statistics and history. And he actually talked about this. We talked about this many months ago, that I wouldn't be too excited about the next rate cuts, because history has told us that it's always followed by a market crash, a recession. Always, guys, in the last 50 years, if you take a look at all of the cuts, and as we do get those interest rate cuts, you pump them, right? And then you start cutting rates, you enter a recession. You pump them from the low, you start cutting rates. After a few months, boom, you get that little dip. Same here in 2008. We had a little one here back in the C19 crash, but we were already kind of peaking out here. This kind of predicts that something is going to happen in the next few months. Something not too nice is going to happen, because this predicted every time that you top out and you start cutting rates, something nasty comes, guys. So not that we're gonna speculate on a recession or something, but history has told us that is the thing that happens. And you get a lot of people, right? This is like the perfect storm, because I see more people that are interested and hyped up about, yes, no more quantitative tightening. We're going to get quantitative easing. So, that's good. That means money printing, more inflation. That means all of my, stocks and crypto are going to pump again. Yes, but after a major collapse, right? Everything recovers later on very, very well after that major collapse, right? But you would expect a collapse first of all. So this whole excitement about getting, quantitative tightening ending, go and watch Benjamin Cowan's latest video, which he explains it very, very good. He actually talks about with this chart basically on top of the stock market, and also not Bitcoin, because Bitcoin wasn't here on for the recession, of course, of 2008 yet. Anyway, let's go through the comment section. Say hello to the beautiful community. We are going to see in 5 minutes Jerome Powell press conference. I haven't got it ready, guys. We don't do that here on the channel. I cannot just stop and watch and listen what this guy is saying as I'm live. It's just not my style, guys. You know that. Ben is the GOAT. He definitely is with analytics and all of that. He is. I wouldn't go in. I don't think he knows much about Elliott wave theory and about trading skills, but I think he's the kind of guy that just buys and holds for the long term. I don't think he does any trading, but his analytics and looking at history is very, very good. Always skipping my comment, mate. No, I'm not. I've just read your comment right now. Where are you? What is the invalidation price of that inverse head and shoulder pattern on the 4 hourly? What is the invalidation? Well, the invalidation of this inverted head and shoulder, I think it's this one right over here. Look no further. It's getting down to the head, right? The invalidation of an inverted head and shoulder is for the right shoulder to get down to the head. There is a big room here, but when we consider Elliott wave theory, I would say that if you claim this higher low, the probabilities will increase to claim this low over here. Okay, so just because you have more of a 3-wave move up here, and of course a 3-wave move up, the only bullish outcome here would be looking at this as an expanding diagonal. Okay, and in this expanding diagonal, you have your wave 1, And you're literally looking, if you claim this low, your only chance, and it's not looking good, of course, is for this to be a flat in a wave 2, which I have to say, expanding diagonals in a wave 1 and expanding diagonals on its own are rare, very rare. It's like 2 out of 100 times, 1 or 2. The probabilities are extremely low, and after an expanding diagonal to form a massive large flat, it's just even more rare. So, but you would want to consider it, of course. It's not an invalidation, it's just rare. So obviously claiming these lows is a good SFP, I have to say, because a reaction bounce is very, very likely. The question is, obviously, after that reaction bounce, you come down and claim this low, or do you actually, form a higher low and continue up? But it's a good SFP regardless, because it's, there's some good levels here. This is why we reacted on the 22nd of October. But this would be the bullish case scenario if it would be a flat here and an expanding diagonal, which is very, very rare on its own. So yeah, not much volatility here, guys. I can see people are already kind of wanting to leave the stream because they want to listen to what this gentleman is going to say, and we are not going to cover that, guys. I'm not putting the video and we're going to listen to him. I might crash some other channels right now, which I will probably see you there. Okay. Much love to everybody. Gracias, Andy, for being real, my friend. Pedro, much love to you, my man. My mind is like the Elliot wave all the time in crypto, but now I'm all flat. Much love, my man. Zhaotao, yo, came up 8 late, but came on time. Zhaotao, much love to you. 𝗬𝗍𝘆𝗽𝗍, where is he? Let's go fill that CME gap at 9K. I have limit orders there. Exactly, right? There's we do have a CME gap all the way down at $9,000. I mean, I got them here on the CME futures. We got a few gaps. Wait, hang on a minute. There's not a gap here. I don't know why this box is. I don't know why I've got a box here. Is there a gap there? Probably not. But there's one at 20K. We got a gap at 20K, guys, that hasn't been filled. Man. There's a gap here at 20,000 that has not been filled, guys. What the heck? $20,000. We've got CME gap also at 9K. That's the one that 𝗬𝗍𝘆𝗽 is saying here. We almost filled it, but we did not. Man, all the rest have been filled. Yeah. So yeah, we got that gap, guys. I do assume that we're so close in filling this gap, and the market is not looking extremely bullish at the moment, but we are at support. Okay, as explained, we are at support, guys. I wanted to talk about the pi cycle. It would be the first time that the moving averages of the pi cycle have not got close together, right? They basically cross for the top of the cycle. It would be the first time out of all of the cycles of Bitcoin. Okay, it'll be the first time, and they are very separated, man. They haven't even gotten close to get together here. So that is disturbing. And usually the moving average needs to pick up, right? The red moving average picks up with this higher time frame moving average. So you need quite a bit of volatility here for the red moving average to pick up. I mean, this is coming all the way to $200,000 almost if we want to cross with the green moving average. So I am skeptical about 200K Bitcoin in this cycle, but some big players do say, right, that we're going to hit 200K. It's one of those cycles that we could say that pi cycle top indicator might fail, guys. It's just it's too easy of an indicator. It's been very well. I remember watching this on the day that it flashed the top here at $60,000 range. Okay, I remember back in the previous cycle when it flashed on the day, guys. And it was literally the top. Yes, we got back up in November, but you get the deal. Anyway, yep, 2025 is crazy for trading. Gonna watch the conference. Yeah, I'm gonna watch it, but I'm gonna take a look at. I might crash into Tom Crown. Tom Crown is the one that covers it the best, I think. I'm not the guy that puts watches Jerome Powell. I think a lot of people are going to be watching the conference on other channels. Okay, so that's what I'm going to do. See you at Crown, says Oreo. Absolutely, we're going to crash on his channel. Shout out to him. Guys, much love. I will see you tomorrow. We've explained a little bit of the situation here of support. We didn't do much Elliott wave theory, but we got Fed Chair Powell speech. People want to listen to what he says. Much love to everybody. Make sure to claim those bonuses down below, guys, if you're interested, either on Bluffin or BTCC. 15% cash back on Bluffin. BTCC, $10,000 of deposit rewards. You have the links down below. I'll see you in another channel, and I'll see you tomorrow.